Welcome back to the family channel. It is your boy Vine. If you are new to the channel, welcome to the team. I appreciate you. Make sure you do like and subscribe if you find something valuable in this video. Today's video, we will be breaking down institutional order flow in the way that I use it to enter the market, exit the market, and smack really big trades. It is my favorite of everything. I love it because it tells me where to enter in the market, tells me the direction of the market, and it allows me to stay patient and allow my trades to play out. So let's get straight into it and break it down like I always do. And make sure if you do find this helpful to hit the subscribe button, hit the like button, you know what I'm saying? And most importantly, what I do want to say is the comment section is your sanctuary, right? I want you guys to go down there, comment what you need from me. Everybody that comment, I answer every single comment. So if you got something that you want to say that's nice, not nice, if you want some help with something or something that you've been dealing with as you look at your trading over the past couple months or the past month, make sure you drop a comment below. Let me know what I could do to help because I am here to do that. So let's get straight into it. And what institutional order flow is it's not the typical where people would see like a tape kind of reading and you have two sides to that reading and it tells you like, okay, this person is entering the market, blah, 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 or exiting the market, bid, sell, all that stuff. That's not what I'm talking about. And I call it institutional order flow because it is something more so expectational order flow. So as we were kids being taught trading, you will get the higher lows. I mean, lower lows, lower highs, lower lows, lower highs. And that's the typical thing, but it's not always that textbook. And what people don't realize is we can just simply follow this trend in the market, but we also could utilize it to catch these big trades if we align it with liquidity and things like that. What I'm going to break down today is just simply the respecting of ranges and how we can know, hey, price is selling, we can continue to sell, or we might get a market shift, and that market shift shows us one thing, and I'm going to show you guys really simple. So essentially what we get is let's just take these entries off here, and what we see is we got our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, as you can see, we had levels in here that got swept like so, levels in here, but those are key points because we want to see that. We even want to see levels that sweep levels, making new low, and then we come back and sweep that level. We want to always see liquidity in our order flow, but what we always want to do to keep it simple is we play our extremes, right? So we may see price making lows from this level or making lows from this level, like, but what we don't want to do is simply just enter off of this or enter off this. We want to enter off our extremes and follow that order flow because we know if we do continue to sell, it's going to always test the latest highs, like this one, like this one, like this one. It's going to test those highs that are very important, and that gave us the big move because this is a leg, this is a full leg, this is a full leg. Now, to break it down even more, when we're actually doing this, what we are, the reason that we understand that we can sell is because we are respecting the ranges. So we take this high to this low, price was in this range, right? This huge range right here. And when price was in this range, we needed to let price break out of that range, right? As you see, we moved to the downside from that point. We actually broke it a little bit here, but we want to see that big move out of that range. And then once price comes back within that range, you can either take a fib, you can take whatever you want, 50%, not necessary, just to show you this is not necessary. This is the 50% of that range. We want to sell out of the premium of that range. Or sometimes price does come back into the, right before the 50% of that level and just goes. And it is the same exact thing. We always want to find that high, that low, figure out where our range is at. Once we break out of that range, which we did here, we come back into that level. Around the 50%, we want to look to sell, follow the order flow, we make a new low. And then again, it's the same thing. This is our low, this is our high, right? That we broke out of. So again, we want to take our points. We want to take our points like so and just say, hey, listen, once we break out of that range, which you see here, we want to come back to the premium of that as you see again. And we know it's not about time in the market or getting a perfect entry. It's about understanding that price should respect this range. And if we were to break this range for some reason, which I'll show you, if we were to break this range for some reason, we would not expect this to just dump. Now it could, but what I would expecting it to do is flip the range and go from low to high. And then we could have that's how we understand where our market shift is. So we have our low to our high right here that we broke up here. And once we break out of that range, we come back into this range and then we want to create a new one like so, and then we do it all again. So you just drag it to where we actually broke out. We come back to that level. We do this. We get a nice move to the upside. We take our range again. And this is how you can say, if you don't understand supply and demand to the fullest, this is how you can understand, hey, we could do this, fly away. We're gonna come back into this range and then potentially respect that range or just respect the cells and go the opposite way. All right, so I do want to get straight to the charts and break everything down for you guys because I know that could get a little bit confusing and it's very easy to see with the candlesticks, but all it simply is price. You want to understand that price will respect ranges and it will respect those ranges. In the moment it doesn't, then you potentially have a market shift and you can understand why some things like breaks of structure or a change of character or market shifts, whatever, may be sweeps of liquidity or so. And I want to show you how all of that works right now. All right, guys. So let's get straight into it. This is some very nasty looking price action, but it's perfect for what I want to show you guys to understand how you can actually catch trades within this. So when we're actually going through this, we want to say, okay, again, simple. We want to follow the order flow. Where is the order flow? Well, we got this consolidation right here. As all price is doing is from this high to this low, is price created a range. When it creates this range, you just want to drag it over until price breaks out of that range. And all we want to see is price come back into that range. Now, in this case, price came back here perfectly. New York open, as you can see. If you follow and gather data and just build up a setup or a trade plan for yourself, you can easily say, hey, listen, this will be something I like. I give myself a whatever, I give myself 100 point stop and then I'm going 1 or 2, and then you see that you could do something like that. You have to gather the data. I'm not here to do that. I'm here to teach you institutional order flow and expectational order flow, right? And all it is once we break out of it, we come back in. Again, we make another high. Again, what do? We had another range from this level to this low right here. Or you could just take this high here if you want and say that was our range that was created. This is our low. We do what? We break out of that, we come back into that level, right? Now this is beautiful, right? Because once we break out of this level, we come back into it, but we don't do what? We can't make a new high over here, right? So we're technically this range hasn't created a new range, meaning when we actually take the level, we create our range here, and then we blow out of that range, we create a range, and then we do it again, and then we create another range from this low to this high. But in this case, price actually stayed within this range. So now we need to wait. Once we take that entry or whatever, price could come down here, respect this range, and then break out of it. And as you can see, right here, we get a tag in this range. We don't make a high. We come into this range. We test the low again, and then we break out of it. So our new level or our new range will be from, we could just take this high because these are equal from this high to this low. And then all we do is, again, we break out of that level. And then as you can see, price starts to run off. And this range isn't respected until we come back to it later. Now, you can say, hey, this swept this level or this low a little bit. So what? It does not matter. On the way up, we create ranges as well. So we have this low to this high, we break out, we come back into it, create another level. We take this low, this high to this low down here, we break out of it, we come back into it on this level right here. And then eventually, what happens? We don't have a true range anymore. We go up here because we expand too far. We don't come back into this one. We make this low and this high, we break out of it, and then we break the range. Soon as you break the range, you should understand, hey, it's not that we're bearish yet. It's the fact that we might have a level that price wants to go back to in the bigger range. And then we also might understand, hey, we might be shifting completely. So let's keep an eye out on that. Well, again, we flip the script now. We broke out of this range here, this buy range, and then price comes down, but price never comes back into it. Well, like, for example, say somebody wanted to enter here. How would you know to enter there? Well, if we were to zoom in really close and get detailed, we can literally say from this high to this low, right here, high to low is our range. We break out of that range, right? Once we break out of that range, we can enter. Price doesn't come back, but this is a way of understanding, hey, expectational order flow. On the way down, remember we have this big range that was untouched. These ones are already mitigated. These ones are untouched on the way back up, so we need to keep an eye out on those. But what we want to see is a market shift potentially if we want to go bull. And what we do is we take this range because this is our high point right here. And this is our low point. Technically, what we are supposed to do is make this range here break out of this range, come back, and then make a new low if we were to stay bearish. But we don't do that, actually. We actually come up and break above this range and come back into it, and then we make a new one, and then come back into that range, make a new one, come back into that range, and then we break it. And the reason we broke it is because we came into this higher time frame range, respected it, and made our way down. So again, this is nasty price action, but it's a very simple way to understand why price is respecting the levels that it is and why it won't respect some levels. It's very simple. So let's look at one more example. As you can see here, and I know this is confusing, it's very like complex, honestly, but it's very simple. People might be watching this video like, this is normal, but it's normal, but it gives you clarity because sometimes you want to trade, and you want sometimes you want to trade and then trade again and get in another trade, but you don't know how many you can really take. You don't understand, and if you just follow the order flow and follow the ranges that were being respected and created, then you can just get in and out of the market, in and out of the market. If this is helping you, do me a solid and just comment below. Let me know if you want to see more of this. I can definitely go more in depth, but I do want to make these videos as quick as possible for you so you can at least start to go on the chart and do it yourself. Here we have Nas, and again, let's start here. We have a level here, and we might say, hey, this range was created, price broke out of it, price never came back into it. Where would I take my entry? You don't take your entry, price left you. You need to wait for something else to be created. As you can see, a new range was created here, right? And when I say range, it's not necessarily just the consolidation. Sometimes that is what it is, but a range could be something like a pivot range. Down here from this high to this low, we broke out of it. Price needs to come back into it, right? We come back into it right there and get some beautiful buys. It's very simple. These are all over the chart, and this is how you technically draw supply and demand zones. But we break out of this range, come up here, and then we take that range out immediately, right? That is a market shift. So assuming that we go bearish, because you could say, hey, well, price has this bullish range right here that we can respect. True. But that bullish range was in the most recent range. We broke the most recent range, which showed the market shift. Now we need to break completely to go full bearish. We need to break completely out of this level because this is our low to our high. Once we break completely out of this level, we come back into the range, as you can see, the larger scale range, and then we respect that by breaking out of it again. But what I want to show you is the way you'll miss a lot of price action waiting that long. If you pull up here from this low to this high, price broke out of that, we come back into that I actually took this entry and I didn't use ranges. I just used the understanding of order flow and all those things like that. And then you could just target something like that. Very simple, right? Then we come into this and then we have to what? This is our low, this is our high. We need to break out of that range if we miss or we looking for another entry of some sort. We drag that over. As you can see, we break out of it. We come in here, we play around, we break out of it again. We come back into it and play around. And where did we play around, guys? I can't make this up. We played around at that equilibrium point. Remember we talked, if you watch any of my videos, premium and discount equilibrium point. That is the point where buyers and sellers are very even-handed. They both are placing and stacking orders, trying to see who's going to take over the market. And when that market is taking over, we know who's in full control in those moments. And by doing this, I take this high to this low. Actually, I'll drag it over. As you can see, we just play right at that 50%. We can't even get above it. And then we play around, and then eventually we break out of this large scale range here. From this low to this high, we break out of that, and then we come back into that slightly, and then we make newer lows down to the daily levels. And then what do we get? A beautiful market shift, because this is the low and this is the high right here. We played around in this range for a week. I was in that action, got a sell and a buy. No, actually, I didn't get this buy here. I got buys here. And we don't actually come back into this range, but now we are creating smaller scale ones. And this is how I was able to catch these trades, because what? We just come back into the range, respect it. We break out of that one again from this high to this low. From this high to this low, we break out, we come back in, we play around, and then we eventually expand. And then this low to this high, again, you break out, you come back into it, expand, and you just follow the expectational order flow. So there is another level to this that I do want to show you guys, but we don't have enough time today. So if you do want to see that video and do want me to make that video, if this is going to help you, all I want to do is put stuff out that's going to help you. So if you believe that this can help you, write order flow down in the comments. I just need 5 of y'all to do it because that's all I care about. I just want to help as many people as possible. Well, even if 5 of y'all only want to see the video, I'm willing to make it, and I'll do that. So I appreciate y'all for watching. Like